Greetings, everybody. Hope you're all doing very well. I'm Michael McCord from the Microinsurance Center at Milliman, and I've been doing microinsurance for about 30 years. And I wanted to come and talk to you briefly about some of the changes that we've seen. So let me start where we should always start, with people. Microinsurance is about people. Low-income people like Atu Peligama, who was in a cyclone in southern Malawi a couple of years ago, and her house was destroyed. As you can see, her business was destroyed, her furniture, everything in her house was all destroyed by the water. And she's sitting there just with her son. Her husband isn't there because her husband was killed too. Low-income people face severe risks. And when things happen, she has no backup, no funds, no way to move forward. So we have to always be thinking about people. Okay? We have to recognize that without good microinsurance, we can't have sustainable development, period. Without good insurance, we can't have sustainable development goals. And even Occam Steiner said that to us from the UNDP. Without good insurance, we can't have the sustainable development goals met. I want to talk about 4 pillars, the key. Over these years, one of the things, among the things that I've learned, is that we need 4 key things for the market to work for microinsurance. We need to have an understanding of the market. We need to understand them. Let's stop excusing our bad products by saying, oh, they don't understand the market. We need to understand them. And it's become better and better over the years, although there are still very large gaps in our understanding of the market. We're putting together products still that don't reflect the needs of low-income people, that are based on intensive interviews, focus groups, research. We need to be understanding better what it is that this market needs and how it needs it to be supplied. So we need to understand the market. We need insurers that are actually interested in this market and see this as a market of the future for them. Not CSR, not those issues. And that's what we saw a lot more in the beginning. Now we see much more interest in microinsurance as a business. And that's what's key. If we can have insurance companies doing this as a business, they'll have a longer term perspective. They'll be able to get to scale. They'll have the stomach to keep moving. And we're seeing more and more of that. Look at AXA for a good example. We also need to have distribution. How are we going to get these products out there to people? In the beginning, it was mostly microfinance institutions. But now, yes, you have microfinance institutions, but MFIs only cover a certain part of this market. And we need to be able to access many more people. More people need microinsurance than need or use now microfinance. And so we use everything from churches to mobile network operators, to anywhere that there's an aggregation of low-income people. Finally, what we need is a facilitative environment, which is where we can have regulation that actually meets the needs of the insurers to be able to meet the needs of the low-income market. More and more. We started out, of course, with 0 regulations. Now there are over 50 countries that have microinsurance regulations. 32 countries have regulations allowing microinsurance-only companies. There's been a lot of movement there, still a lot of work to be done, but it's a very positive movement. So keep thinking as you're deliberating. Think about these 4 pillars. Think about the need for those. We have had advancements. You look at products, we have all kinds of products now out there, almost everything you can think of we have. In the beginning, it was just credit life. But this is a great movement. There's been great progress. So think about that and think about Atu Peligama. We're talking about people. People are the foundation of microinsurance. Thank you.
All right. Good morning, good afternoon, good evening. My name is Alexis Latortue. I'm your moderator for the session. I'll jump straight into the panel now first. So if there is one thing certain in life, it is that there are a lot of uncertainties about how the future will unfold. Faced with the certainty of uncertainties, paralysis or inaction is not an option. And so I'm thrilled that the theme of this year's Financial Inclusion Week is building resilience and well-being. And the topic of this session, insurance, explores a powerful, yet still too often overlooked, underfunded, and under-researched financial instrument that, if deployed responsibly, is extremely well-suited to helping people and businesses be proactive in planning for an uncertain future and emerging risks in a way that builds their resilience. Indeed, an upcoming CFI study notes, insurance is not just a safety net. When well designed, it becomes a tool for confidence, continuity, and better decision-making. Yet, according to Findex 2025, less than 23% of adults across low and middle income countries pay an insurer today. And while the number of people covered by microinsurance has grown by 70% over the past 3 years, according to Microinsurance Landscape 2024, the current coverage reaches only 334 million people across 37 countries. That's about equivalent to the populations of the least 2 populated countries in Africa, Seychelles and Sao Tome and Principe. And as Queen Maxima said in her opening remarks, access is just a starting point, not the finish line. With this brief introduction, welcome to the session on unlocking the potential of microinsurance to build resilience. We have 3 fantastic speakers, thinkers, and importantly, doers. Let me start immediately with you, Sitara Merchant. You're the CEO of the Swiss Capacity Building Fund, and the fund supported the pilot of a heat-linked insurance product with the Self-Employed Women's Association, or SEWA, in India. Now, SEWA has over 3.2 million women as members across 18 states in India. We know that extreme weather is likely to worsen societal inequalities, disproportionately affecting the most vulnerable. Sitara, please tell us about the innovative product, how this innovative product has come about, insights you learned during the design process, any challenges in delivery, as well as the response from the market.
Thank you, Alexia, and hello, everyone. So when we talk about climate risk, heat stress often is overlooked. Yet for over millions of informal women workers, whether it be street vendors, construction laborers, domestic helpers, rising temperatures are not an abstract issue. They're a daily threat to income, health, and dignity. So the SEWA initiative in India asks a simple question. Can insurance protect women's livelihoods from extreme heat, a risk that is becoming both more frequent and more deadly? So prior to SCBF funding this initiative, the project, this was in 2023, Blue Marble, SEWA, and co-funded by Adrian Ash Rockefeller Foundation Resilience Center, conducted a 2-month pilot of parametric extreme heat insurance. This was done in 5 urban and peri-urban districts of Gujarat, including Ahmedabad. The pilot covered about 21,000 SEWA women workers across 8 informal trade sectors. It aimed to protect the income against heat disruptions. The pilot demonstrated, and this was before we funded them, the pilot demonstrated the technical and commercial viability, showing that parametric insurance could offer meaningful protection to low-income informal workers facing climate risk in India. Then what they did was they did an extensive evaluation in which they conducted focus groups. During these focus groups, the women actually pointed out that there was a need for a more comprehensive product and not only cover extreme heat, but also address excess rainfall, another major climate-related threat. There was no clear demand for longer coverage periods to align better with seasonal risks. But drawing on some of these lessons, Blue Marble and SEWA worked together to refine the product. SEWA, serving a financial sector partner, identified an added value of the meso-level insurance model. So rather than micro, it was also meso, which would also broaden the coverage and provide flexibility to deliver both individual and cash payouts at the community level. So how did SCBF's grant help? SCBF funded the SEWA to move from sort of a pilot to a scalable insurance product through three critical enhancements. First, the transition from micro level to meso level. This allowed the reduction of costs and the sort of sharing out of different costs to gain economies of scale. It also, so initially the package cost was at the micro level was $20 per person. This approach, going to a meso level approach, actually brought the cost down to between $10 and $12 per person, closing that affordability gap. The package is co-financed through SEWA members, so they contribute $2, and then AshRock will fundraise the remainder. So there is sort of a premium subsidy component here. The dramatic cost reduction of 40 to 50% makes participation more feasible for extremely low-income households while maintaining a comprehensive coverage. The long-term strategy is to embed packaged in their social protection program of the states where it is implemented, ensuring sustainability beyond the donor funding. So what are the challenges? I'll mention three challenges that stood out in the implementation. The first was data precision. So urban heat, for example, varies from one block to another. So it may be hotter in one area than another. So matching the local exposure with the meteorological data remained very tricky. And so finding, what is the right measure is and continues to be very important. The second one, as I talked about, was really about affordability. Even with the small premiums, there's still a burden in terms of both the cost, because $10 to $12 is still expensive for daily wage earners, and the subsidies or bundling with other products is still needed so that you can really gain better value. And the last point is really around distribution. Despite digital channels, trusted human intermediaries are critical and vital to building an understanding of awareness. So these are the challenges that remind us that innovation rarely falls on design. It really falls on delivery. Reliable data, fair pricing, and community trusts are where the real work lies.
All right. Thank you so much for that, Sitara. We'll get to dive in a little bit more later. But now let me please turn to Yash Gaharat. You've been with the One Acre Fund for the last 7 years, and you're now the country manager in Malawi, a country that has experienced both devastating floods and droughts in the same year. One Acre Fund's vision is big harvests, healthy families, and rich soils. How has One Acre partnered with microinsurers to help build resilience for smallholders, one of the most vulnerable population segments to climate change?
Yeah, thank you for the question, Alexia, and hello to everybody listening in. Maybe I'll explain a little bit about what the product is and then jump into how we think it's helping build resilience, and finally how we've worked with microinsurers. So the first thing to note is One Acre Fund in Malawi offers inputs to smallholder farmers on loan, and the insurance is bundled with these inputs. So it is not something that farmers choose to get, but they are already covered when they join One Acre Fund. They're already covered by this insurance, which means we are helping scale the number of insured farmers, to add to your analogy of the two smallest countries in Africa. So hopefully that's helping. And then second, it's important to remember that the insurance we can offer at the moment covers the value of the loan and the value of the inputs, essentially. It is not helping cover the value of the crop that farmers are losing because of the floods or the drought. And obviously that's a huge issue, that's a big shortcoming. But it is still something that we feel is worth doing as we continue advocating for a world where covering the value of the lost crop is also going to be economically feasible or sort of, regulatorily possible. So maybe now I will turn it to how we think it's helping build resilience. So the first thing to remember is when a disaster strikes, this sort of insurance is providing a floor to the damages that farmers face, right? So it in that sense, it does act as a safety net, and that is the sort of one of the basic needs of that our farmers have. That when they start losing something, there is a place at which, okay, they've lost some of the crop, they've lost other things, but hopefully they don't lose all of the value of the loan or the value of the investment that they placed in the loan. The second thing is then it can offer, the same floor offers them a chance to sort of get up and go back and reinvest. So this kind of speaks to the continuity point that you mentioned earlier. What we think it helps farmers do is say, okay, I lost my crop, but at least I didn't lose the entire loan and I didn't go into more debt. And so now I can go back and reinvest and try and increase my agricultural production again next season. And then the third thing relates to kind of the confidence point that you mentioned as well, which is related to kind of mental or psychological relief, right? So I think it's important to remember that having just lost a lot or having faced a natural disaster, farmers are feeling very vulnerable. And what farmers have told us is having some sort of system to support them in the form of insurance provides them mental relief. Obviously, it is actual relief, so they don't have to kind of go into negative coping mechanisms to survive. And they just feel more supported. They feel like somebody cares and somebody has come in to support me. So yeah, these are kind of the big ways in which we think farmers are becoming slightly more resilient with tools like what we can offer. In terms of how we work with microinsurers, the biggest thing that we feel is One Acre Fund is a conduit between sort of the individual farmer in southern Malawi, where I live, all the way to the biggest and brightest possible minds and companies on insurance in the world. So what we're trying to do is translate kind of the need that a farmer has in Malawi and take it all the way to whoever can give us a well-designed product, a well-thought-out product, and then take that back to the farmer. And so in that way, we're really trying to design an ecosystem, bringing as many partners, research partners, and actual insurers, reinsurers together to create something that really answers the need that farmers face. So that's kind of our role, and that's how we have worked with all the players in this industry.
Thank you for that. And I think your point about, being able to be in a state of mind to plan for the future, I think is one that actually we have a lot of research confirming. So thank you for that. It's not only about the finances. So that makes a lot of sense. So I now want to turn to you, Lorenzo Chan. You're a true visionary leader and author, and you're the president and CEO of Pioneer, one of the largest commercial insurers in the Philippines. You're also the chair of the Microinsurance Network, a network that I am very fond of. The Philippines, we all know, experiences typhoons every year. And in response, pioneered anticipatory insurance payouts. What is this product, Lorenzo? And tell us a bit about how you developed it, how it works. Also, I understand that Pioneer prides itself on its claims process. And what processes have you had to put in place to develop, to make these payouts?
Right. Well, thank you. I think the first thing about product development, and whether anticipatory or not, to do that means you have to get out of the office. Get out of the office, out into the market, to where your target market is. And so this means going down to the end customer that you've identified. We do it directly. Sometimes we do it with our partners. And the purpose is simple. It is to ask them, what are the risks that you face on a daily basis? What's top of mind? What are the needs that you need to address, while you face these risks? How much can you afford to set aside? And it isn't just amount, it's also the frequency of when they get their income. Some are daily wage earners, some are weekly, some are monthly, and you can adjust accordingly. And so with that in mind, we realized that what they had was a basket of needs. And so we bundled them into one particular product, a bit of life, a bit of accident, and very primarily important in islands like ours, property damage arising from flood, typhoon, and earthquake. All these favorite calamities which we are a part of. And so the objective we clearly had in mind was that to help the specific market, the intention is not to replace the full value of the client's property. It is rather to provide timely cash assistance, simply enough to get them back on their feet, to rebuild, to put back the roof, to put someone, get someone into medical care. So the objective is that they do not have to start from scratch. They don't have to reset to ground zero. So it's part of what they've had has been preserved. And so it's to offer immediate financial relief for them so that they can make the essential repairs. So with that in mind, and that customer centricity in mind, we developed a product and do a lot of iterations with the market before we finally launch it. The objective is to get paid in less than 5 days. In the original, the government says you should pay microclaims within 10 days upon completion of documents. We say within 5 days from date of occurrence. These days, we're trying to target 1 to 2 days. Yes, quite a lot of effort. Now, to do that, we also simplified claims processes by introducing a validation tool that makes damage assessment so much easier and faster. For instance, we say each wall is about damage to each wall is about 10% of the total payout. It's 25% for each side of the roofing, because they have 2 sides, and 10% for the floor. That gives you a quick ability to sort of take one look and assess. Through this tool, we can then quickly verify the extent of losses, allowing us to process payouts more efficiently. So payments are done through bank transfer, mobile wallets, remittance facilities, and even pawn shops. And in Typhoon Haiyan, one of the worst storms, we no longer did any of that because none of those were working. We were out in the field with cash in hand, paying them out. So yeah, I think that sort of allows us to be able to do that.
That's great. I want to sign up with you. 5 days for a payment of claims. I want to sign up with you, Lorenzo. And I think all three of you very much underscored the point of getting close to the clients, right? Which is fundamental. So I want to take 1 or 2 quick questions that I'm seeing in the chat, and then turn to my next question. There was a specific question to you, Yesh, about being precise about exactly what the insurance that you provide covers, and also can clients borrow from you again in the future, even if they've had a challenge. So maybe that's a question for you. Why don't you start with that, and then I'll go to a few others.
Yeah, I also left a response in the chat, but yeah, Arnav, thanks for the question. Basically, the insurance covers part of the value of the loan, usually up to 75%, can be a little higher, can be a little lower, depends on the year and the product. And that is usually enough to help farmers kind of pay off most of the loan and then be able to rejoin again next year. And one thing that we are trying to do is bring sort of triangulate different policies to provide maximum overlapping coverage in a way. So using different sources of data, different kinds of data, and then making sure that as much as possible we cover the maximum value possible for the loan, so that farmers have less and less to repay.
That's great, thanks. And a question to you, Sitara. So, very happy to hear about your emphasis of climate data and how important that is, but also a question about, is there anything preventive that can be done, particularly in urban settings, to help sort of address rising temperatures?
There are. Thank you for the question. There are different things that can be done. There's a lot happening around sort of green infrastructure. So expanding green cover, green roofs, urban parks, that tends to lower. There's also cool and reflective materials that can actually be used to make the heat less intense. There's also water sensitive design. So that's something you can also look at. So integrating fountains or water channels into sort of the urban planning component. How urban plans are made are also really important. And then another one is building orientation. So if you think about, in the Northern Hemisphere, if you're facing the West, if you're in the Southern, it's the opposite. So you've got to just make sure that the heat is reflective off the buildings, and you can use different types of material to make it more reflective and less heating as such.
No, thank you for that. And I come from the United States, and there's a statistic that really shocked me about a city that's not too far from Washington, D.C. called Baltimore, where the difference in temperature from one part of the city to another part of the city can be as high as 15 degrees, just based on whether or not they're employing some of these techniques that you mentioned. And of course, the poorer parts of the city are the hottest part of the city. So it really can make a difference.
Yeah.
So Lorenzo, I'm going to have this question for all of you, but I want to start with Lorenzo, and it's a bit of a pesky question. So all three of you talked about really great innovations. Great. But I want to get to the pesky question of scale, because that's often where we sort of, fall behind. And so I want to hear from all three of you, starting with Lorenzo, about really how do you get to great scale? What are the challenges to scale? And what do you need? What does the sector need to be able to really, truly get to scale?
Number one is awareness. As an insurer, I know I'm not loved. I know that people look at us and they say, you only want my money, you don't want to pay my claims. And I have self-awareness of that, so very important. So to target that specific market and get scale and get volume and drive spread, you need to partner. It's too late for us to gain traction on our own. So we've got to partner, choose possible partners. These are organizations, entities that the target market trusts, they patronize. And so we sort of ride on that credibility. And then ultimately that helps us get a foot in, but we must earn the trust, okay? We only have credibility with that, but we must earn the trust by paying claims, by paying claims, by paying claims. So the proper partnerships are very, very important. I think with that in mind, then you can then sort out what they need and then address the need. And that gives you scale. And so our partners include schools, microfinance institutes, cooperatives, pawn shops, the shopping mall, as well as rural banks. And and money remittance agencies. So quite a bit.
Fantastic. Going to you next, Yesh. Same question.
I can build a nice segue from Lorenzo, because I think going back to the need for partnerships, I would say we need to keep finding insurers like Pioneer and you, Lorenzo, that kind of understand how the last mile works and what needs to be done, what kind of products need to be designed for the clients to feel like, yes, this is a good product that is working for me. Good partnerships and partners with the right values and the right outlooks. The second thing I would say is bundling insurance as part of other things that are going on. So in our case, it comes bundled in with the inputs. Farmers don't have to think about choosing insurance. They're already insured when they join us. And then third, I'll say, is maybe on the product side, also a self-awareness, kind of like what Lorenzo mentioned, just to make sure that expectations of what insurance can and cannot do are realistic. And as much as possible, we are really designing good products that are attractive to clients, that are meaningful to farmers or other clients, and they feel the positive benefit of having been insured.
Excellent. Thank you. Sitara.
Great, thank you. Just to build on what said, awareness, yes, absolutely. For the product, the SEWA product, for us, what really worked, or for what SEWA really worked, was how quickly, so as soon as a heat was triggered, it was predicted, women were able to get money, so they could choose either to forego the income and stay at home that day, or they could go out and purchase umbrellas, things that would protect them from the heat. And so that, to us, was just like, wow. And I think this is the direction we need to go. Lorenzo talked about 5 days. I think we need to even move faster where possible. And in this case, that's what we were able to do. I think the other thing is there's a huge cost associated with all of these things. And so I think volume is a key. In this example that we talked about, they move from micro to meso. That's critical. If you're able to scale these through cooperatives, it's critical. Product, of course, you've got to have the right product and the right solution that people really understand and are able to use.
Yeah, fantastic. So I think common themes across the three of you: self-awareness and awareness of the potential clients, for sure. Platforms, make partnerships with people, institutions that already have broad platforms with the clients you're trying to reach. Speed. Trust. Very key messages. Very good. All right, my friends here. So a final question to the three of you. And here I'm going to ask you to be quite quick. So it's a popcorn round. If you had to bet on one innovation that could unlock the potential of microinsurance to truly build resilience in the next 5 years, what would be your bet? Facial expressions. Who's ready? Sitara, you're ready. Go.
I'm ready. I would bet on next generation of anticipatory insurance. So models that combine satellite, AI-driven climate data and digital payments to release the funds automatically and protect households before the crisis deepens.
Excellent. I was wondering when AI was going to come up, so it's come up. Excellent. All right. Next. Yes, Lorenzo had his hand up. Go, Lorenzo.
Okay, I want to work. I'm intrigued by having a working parametric insurance that is blended or in a hybrid model that combines automatic triggers with ground level validation, a quick one. This helps reduce the basis risk. It's still the gap between what the model says and what people actually experience. And we have to get around that to convince them this is a workable model that'll serve their needs.
Excellent. Yes.
I want to go with Sub-Saharan and Lorenzo's ideas, but the other final idea I'll say is, in our context, looking at some sort of systems change. So working with governments, working with insurers, working with reinsurers to really figure out how to make the product cheaper and more accessible to the vast majority of clients like ours, so that the scale goes up radically.
Yeah. Fantastic. While we were chatting, waiting for the session to start, Lorenzo mentioned that he's been at this since 2008, I think you said, Lorenzo. And I think what we have today that's different from then, including just the lived experience, is we have much better data through all the means that Sitara mentioned, including satellite. We have AI, and I hope we have even more earnest and honest, open partnerships that truly allow us to meet clients where they are, but really a far greater number of clients. So I'm really happy to all of you who listen to us. We really do believe that microinsurance is a critical piece of the puzzle in terms of helping people around the world facing greater and greater shocks build their resilience, be able to plan for the future, take care of their businesses and their families. And so we're grateful to these three leaders, but to all of you listening who are doing the hard work, listening to clients and developing and delivering sound and responsible products. It's the end of this session. Michael McCord, also a pillar in this field, and I wish you a continued happy Financial Inclusion Week. Thank you so much.